Good morning, everyone, and happy Friday. It is Julie here with your TipRanks pre-market morning update, where we're bringing you everything you need to know before the market opens. So let's get into it. All right, guys, welcome back, and thank you all so much for being here. Today, we're going to take a look at exciting stock market news, notable earnings reports, and the morning's biggest gainers and losers. Just before we get into all of that, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. All right, let's get right into this morning's exciting stock market news. It looks like we're ending the week off with U.S. stock futures in the green. Currently, the Dow futures are up 0.3%, S&P 500 futures up 0.2%, and NASDAQ futures up 0.24%. Johnson & Johnson was up 3.5% so far in the pre-market after the company reported that it will be splitting itself in two. The Wall Street Journal reported that Johnson & Johnson plans to spin off its consumer brands, which include Aveeno, Band-Aid, Tylenol, and Listerine, from its pharmaceutical division, which developed the COVID vaccine, among other treatments. They will shed their consumer division in 18 to 24 months. Their chief executive said that the best path forward to ensure sustainable growth over the long term and better meet patient and consumer demands is to have our consumer business operate as a separate healthcare company. Their stock is rated a strong buy with an average upside of 20%. General Mills plans to sell its ready-to-eat meal brand Helper and soup brand Progresso for $3 billion. The move follows the company's announcement in March to sell its 51% stake in the European operations of yogurt maker Yoplait to French dairy cooperative Sodile. In return, General Mills asked for full ownership of Yoplait's Canadian business. Their stock is currently rated a hold with an average upside of 3%. Spotify Technologies announced that they have entered into an agreement to acquire digital audiobook distribution company Findaway. With Findaway in its portfolio, Spotify will strengthen its presence in the audiobook space, which has seen robust growth in recent times. The acquisition will allow Spotify access to Findaway's technology infrastructure, which will enable the company to scale its audiobook offerings. Publishers, authors, and independent creators on the platform will be able to reach Spotify's millions of customers around the globe. The Spotify stock is rated a moderate buy with an average upside of 15%. Now moving over to notable earnings reports. It has been quite the ride for Lordstown shares this week. After closing up nearly 24% yesterday, the shares are now down 10% this morning, following a narrower than expected loss for their third quarter. Lordstown reported a net loss of 54 cents per share, which was narrower than the street's estimates of 59 cents per share. The company incurred capital expenditure of nearly $80 million during the quarter and had a cash balance of $233.8 million. For their full-year outlook, they're expecting to report cash balance between $150 and $180 million at the end of the fourth quarter and anticipate capital expenditure in the range of $330 to $350 million. Their stock is rated a moderate sell with an average downside of 3%. Shares of BLNK Charging were up over 5.5% in the pre-market after posting their third quarter results. Total revenues of $6.4 million rose 607% year over year and surpassed analyst expectations of $4.52 million. Their service revenues increased 425% year over year, and product sales surged 766%. They did report a net loss of 36 cents per share against the street's loss estimate of 29 cents per share. Their stock is rated a moderate buy with an average downside of 13%. And we also heard from Luminar Technologies, who did post lower than expected revenues for their third quarter. The company incurred an adjusted loss of 10 cents per share, which was lower than the loss of 22 cents per share reported in the same quarter last year and in line with analyst expectations. Their total revenues generated during the quarter grew 89% year over year and stood at $8 million against the estimates of $8.89 million. Their stock is currently rated a moderate buy with an average upside of nearly 30%. Now let's take a look at which stocks are this morning's biggest gainers and losers. Our biggest gainers this morning are led by RLX Technology. Under the ticker RLX, they're currently up over 20%. They're followed by Farfetch under the ticker FTCH, up over 11%, and Apellis Pharmaceuticals under APLS, up 8.5%. Our biggest losers this morning are led by the Qurate Retail Group. Under the ticker QRTEA, they're currently down over 11%, followed by KE Holdings under BEKE, down almost 8%, and Doximity under DOCS, down over 4%. So that's going to be everything for Friday's pre-market morning update, getting you up to speed with what you need to know before that opening bell. If you made it to the end of today's video, make sure you hit that thumbs up button and say good morning in the comments down below. I always love hearing from you guys. Thank you all so much for watching. I hope you have a wonderful weekend, and I'll see you back here next time.